Hi, everybody. It's Peter Schiff. This is Tuesday, June 2nd, 2009. As you can see by the backdrop, I am still at Abu Dhabi. I finished the conference today. First of all, comment on the markets. Another very weak day for the dollar. Dollar index dropped another 1%, closed below 78.40. The chart continues to look weak, and I expect further weakness pretty much daily. The gold stocks were once again strong. The Huey index traded above 400 for the second time in a few days, closed just below that level. I do expect that index to be above 400 shortly. The bond market gained back some of what it lost yesterday. Of course, I actually misspoke on the blog yesterday when I mentioned that rates rose 250 basis points in a single day. They actually rose 25 basis points. 250 basis points would be enormous, although I don't think that's impossible, and I think it will happen one day. We haven't had that big a bloodbath in the bond market yet, but we'll see what happens over the next couple of years, because I think something like that will happen someday soon. Interestingly, in the news, Tim Geithner is in China right now, basically on a road show or a dog and ponies show, similar to the one Hillary Clinton was on not too long ago, to try to reassure the Chinese that their investments in U.S. treasuries are sound. And, Geithner is kind of like a used car salesman here, where he's rolled back the odometer on a clunker, and now he's trying to convince car shoppers that the car belonged to a little old lady who only drove it once a week back and forth to church. I wonder if anybody in China is actually buying this sales pitch. I know that when he spoke at a university in Peking, according to some reports that I read, the students were actually laughing as he tried to reassure how sound the investments were. In addition to trying to reassure nervous investors about how safe their investments were. And again, too, it kind of reminded me of that time the head of Bear Stearns came on television and claimed that all was well, that the company was sound. But in addition to trying to persuade our creditors that they should keep buying, Geithner also had economic advice for the Chinese. And, I mentioned this in my book, in Crash Proof, but I always find it kind of amazing that America gives economic advice to China. I compared that to an F student giving studying tips to an A student. And of course, the equivalent of what we tell them is, to cut class and smoke pot, and that's how you get better grades. Of course, what did Geithner tell the Chinese that they needed to do to improve their economy? Remember, they've got the surpluses. They're the ones that are lending us money, and we're giving them advice. And what we told the Chinese to do was that they needed more government programs like government-provided health care benefits and government-provided Social Security benefits so that their citizens won't feel a need to save so that they can pay for these things themselves, that they will instead rely on government, and so they'll spend more. So can you imagine that? Can you imagine the Secretary of the Treasury of the United States going to communist China, telling them that their approach is too free market, that they have too much capitalism, that what the Chinese need to do is adopt the same socialist agenda that America has adopted, and that they need to follow our lead away from free market economics towards socialism and central government planning. Can you imagine the irony of those statements? And you don't even have to imagine it because it's reality. And the crazy thing, Geithner is saying that, the problem is the Chinese are not spending enough. They need to spend more, and that they're saving too much, and they need to save less, without even understanding the fact that he's over there begging them to lend us money. Well, they can't keep lending us money if they stop saving. The Chinese can't spend their money and lend the same money to us. It's either one or the other. The reality is there's nothing wrong with Chinese savings. Chinese savings is the key to prosperity. It's the key to growth. The problem is the way the Chinese are saving. They're saving their money in dollars. And since we can't pay them back, a lot of their savings are going to end up being squandered. What they should be doing is saving through other means. And while they're saving in dollars, they're actually helping to undermine the American economy because we're simply taking their money and squandering it. We're either blowing it on consumption or the money is being used to finance the growth of our government, which is undermining our economy. Now, I want to also talk a little bit about the conference today. And, generally there was just three of us. There was one guy from the International Monetary Fund and Stephen Roach. And basically, there was a lot of agreement among the three of us. But the one point of contention seemed to be on the global economy. I am much more optimistic. And the main difference is guys like Stephen Roach, who is a very, very bright guy, still look at American consumption as a driver of the global economy. And they somehow can't conceive of a prosperous global economy, at least in the short run, without American demand. And for some reason, I was unable to persuade them or to win them over to my line of thinking that it's very easy for foreign demand to pick up the slack. That when the U.S. dollar collapses, which is what I expect, and foreign currencies rise, that is the equivalent of cutting prices for everybody else. And it's lower prices that create demand or that turn potential demand into real demand. Because there is demand. There's plenty of demand in China. It just can't be realized with today's exchange rates. It's like when the first plasma TV came out, and I remember they cost over $10,000 a piece. And I thought that was pretty cool, and I really wanted one. I certainly demanded one, right? I wanted it. I had the desire to have that television set. But I didn't buy it because I really couldn't afford it. The price was too high. It wasn't until the TV sets got down to around maybe $1,400 or $1,500 that I finally bought one. And so what created demand, or what turned my desire into demand, was falling prices. When the TV set got cheap enough so that I can afford it, I bought it. And that's what's going to happen around the world as the dollar falls and other currencies rise, particularly currencies in China. There are plenty of products that the Chinese want. The only thing that stops them from buying them is that they can't afford them. They can't afford them because of the actions of their own government to artificially suppress the purchasing power of their currency so that we can afford to buy products that otherwise would be consumed by the Chinese. And when their currency rises, and it will rise, and ours falls, this demand will be there. And the Chinese will finally be able to really enjoy the fruits of their labor. And, in my discussions here in the Emirates, again, the people I talk to, say that they need a strong American economy. They need the American economy to stay strong, mainly because they see America as a vibrant market for their oil exports. What they don't understand is that the American economy is not strong. The only reason America is still buying all this oil is because people in countries like the Emirates are loaning them the money, that they're vendor financing. And ultimately, this is a destructive relationship for both parties. What the oil exporting countries really need is consumers who can afford their oil, consumers who can export products that countries like the Emirates don't produce, that they can buy with their oil revenues. What they don't want is a customer that needs to borrow money to buy the oil. What they don't want to do is stockpile dollar bills, to just stack them up in a pile without any ability to ever be able to spend them. It's a delusion. It's every bit as much a delusion as our phony economy in the United States. And the whole thing needs to come to an end. But it's just amazing how many people here in the Gulf region, and very smart people like Stephen Roach, still can't put this very simple puzzle together and understand how it's all going to play out. Hopefully the facts will ultimately bear me out, and a lot of these people, many smarter than I am, will ultimately come to this conclusion, and we can go back to some economic sanity here in the Middle East and back in the United States and in Asia. Anyway, that's it for today. So long.